Hey, Trevor. You
I'm
walking?
actually in my car because I was waiting for it to get dark to walk Nexus in the dark.
Oh. Okay. Be careful.
Yeah. I was just going to join on my phone, and then when you said, "Well, might need you to talk," I thought, "Well, I'll get on my laptop. It's not dark yet, anyways."
Oh, you don't need to do that. You can. You'll be fine. I think it's pretty basic stuff that you'll know. I just wanted I might lean on you a little bit.
Yeah, no, it's fine. I'm happy to do it, and other than I look funny sitting in a car. I like your screensaver.
Thank you. Coming your way. I was trying to do something I know what it was. Right. Well, I'm gonna have to start letting people in. I was trying to do a music thing. Do you hear my music?
No.
Hey, Jasmine.
You're on mute if you think you're talking to us.
Okay, sorry. Okay, guys, can you hear me?
Yes.
Let me see if I can help you with the music. Oh, you already helped people.
I was trying to do music, but I can't get it to work. Can you hear me okay, Jasmine?
Yes.
All right, let me presentation.
You definitely don't want to let me pick the music.
I don't know. We might like yours and you might like ours. I know what you like a little bit, Trevor. Yeah, I also give you sharing, Jasmine. You know where I got to remind you know where the file is as well, Jasmine? They're all in.
Yes.
Okay. Let me just get first to share.
Can you hear the music?
Very light.
I don't hear music.
Oh, okay.
I heard something very light. Oh, it says women. That's okay. What do you see, Jasmine?
Yeah, your screen, massive capital webinar case study.
That's okay. All right. You can start letting people in if you want. I'm going to turn on my light.
Okay. Hello. Good afternoon. Welcome in. I see Maria.
Hey.
Hey, Jakin, I was just working on your paperwork whole day here.
I figured it was a big, busy day, so.
Hey, Mark,
Yes.
did you work on our music plan?
Not yet. I'm still figuring it out.
Mm.
I know. I could like start beatboxing for you. That probably wouldn't be a good idea. Nick is here too, just with the background, you can't see him. So there we go.
Hey,
Love your background.
Yeah, I know. It looks like yours.
You gotta get Trevor's lined up.
Mhm.
So Jakin, nice to see you. As I heard Jasmine mention, I hear you're one of our newest investors.
I am hopping in the Macon deal.
So congratulations.
Welcome, Jakin. I'm glad you got in.
It's 10x now, cash flow.
Which deal was that? Jakin?
The Macon, Georgia.
Ah, got it.
Yeah, we're just really at the very, very end on that. We closed out our Pasadena raise. We closed out this one. Pretty much closed out the other 4 or 5. We had a good run. On the McCallum, we went for about 36 days between November 24th or so and the end of the year. Did about a little over 6 million, 36 days.
Nice.
We're becoming a capital raising machine.
Yes, we are.
That's the plan.
That's massive.
Good one, Jakin. Never heard that one before.
Right? Yeah.
Plan, man. I want to hear everything being massive.
Hey, Mike.
All right,
Hey,
all right,
Jasmine.
get started.
Maria,
Hey, buddy. Good to see you. Good to see you.
you too.
So hopefully everybody can see the screen here. Agenda, just gonna get a little quicker through a lot of this. Oops. Anyway, this one piece here, but I'm gonna go to this one. Agenda. Who's massive capital? Gonna get through this quick, go through some partnering business opportunities. And then we'll get into the brunt of this, which is the building generational wealth. Hey, Jasmine, we're recording, correct? We didn't stop the recording, did we?
No, it's recording now.
Okay, good. Then we're going to talk about building generational wealth and see what kind of questions and what's important to people. Answer a few, maybe, hopefully, and go through a little bit of Q&A and just discussion beyond that. So, let's see. Let me open my chat as well. I'll let Maria, Jasmine, you guys keep an eye on the chat for us, please.
Will do.
Y'all back up. So massive capital. Appreciate y'all coming out tonight. And again, we're this is our weekly webinar discussion period. We'll be doing more underwriting in January. We're going to be talking about in more depth about investing from a 401k or an IRA. We're going to have some experts coming in and talk about that as well. So, you know, we'll be continuing this every Wednesday at 6, getting more value every week, sharing some of what we're doing on deals, where we are on deals, and how that whole process is going for us. So, just real quick, massive capital is a partnership. It's really 4 principals, but 3 currently full-time active on this. Sanjay, Shrier Khan, myself, Ajit Kirani is actually going to be coming into doing some educational support work with us. Ajit, as well as part of the team. And then we have team behind the team that does all the work, really, which is, a lot of Jasmine, Candace Stearns, Amiz, I'm not sure is on tonight, Bhaskar, who's our finance manager, based overseas as well, and Maria Marks, our director of podcasts and investor portals. Yeah, we hope to be this week and next week. I think we will be doubling this probably or so on who's working with us and all the support we're bringing in. So it's just real quick. And then 2 of our big backing people, Paul Sink, who's has his own family. Paul, are you on tonight? I don't know if you're here. Put your hand up if you're here. Paul has basically, family office. He's been doing real estate for many years. He's an ex-surgeon. So Paul comes to us with a lot of experience in the know-how and how, gives us a lot of guidance in what we're doing. Ash Shah. Ash has about
Paul is here.
Okay, come back to Paul and let him say hi and share a bit. Ash comes to us about 1.6 billion of AUM. And as well, Ash brings to us, he's on a regular calls with us, advising what to do, what not to do, showing us new deals and continuing to allow to build. I actually need to update his because that was 1.2. Now he's like 1.6 billion. So just want to share we have a large backing, not only on a balance sheet, but extreme experience from both Paul and Ash. Hey, Paul, do you want to say hi?
Hey, hi, everybody. Want to say Happy New Year, and we're looking forward to a really great 2023. I know there's some challenges out there with the economy right now, but with this great team that we have, we're going to get through this. We're going to find some creative ways to continue to find new properties and new ways of making all this happen. And we're so happy that we have all of you people here for Massive Capital and potential investors. And please let us know how we can add value to you.
Thanks, Paul. That's awesome. Shit. So moving on to what we're doing, and who we're partnering with, and just kind of where we're doing deals at currently. So this is about the same as I think last week we shared the still have under contract property, piece of land in Houston. We're finalizing some things there. We may be actually exiting that contract just because of some of the things Paul talked about, challenges with that was a new development. So just looking at the value of what we're able to build for versus what the rents like is a bit thinner than we expected. What we'll do is when we don't do some deals like this, we'll bring them back, and we're going to be doing the case studies on those deals. So we'll come and show you, hey, we worked on this for 2 or 3 months. This is why we got to, this is why we didn't do it, and share that and let everybody learn from why we didn't do some deals. We've done that a couple times now, as well as why we do the deals. We have some land in Austin now under contract and moving forward with that. Paul's leading that for us. It's called Georgetown is the name of the deal. And then we have 88 units in San Antonio under contract currently. You can see, we're investing, looks kind of like a line across somewhere there, but kind of south. and a little bit to the east. Generally, a lot in Texas. Texas still looks to be one of the top markets, still growing. So we still get a lot of feedback. Texas and how Dallas, Houston, growing in those, as well as San Antonio. We talked last time, and just we'll touch base on this quickly because many of you start to see this, and we don't want to be repetitive of that. But this is one of the ways of how we structure our partnerships. So just take a look, take a snapshot of it if you want, and it'll be in this for the future for when you get the recordings of these as well. We're now all these recordings should now be on our YouTube channel. Jasmine, maybe you or Maria can share the link to the YouTube channel that people can subscribe to. So what we're doing is we got 5 buckets we work in: deal sourcing, risk capital, due diligence process of all that, loan guarantor, balance sheets, and experience, LP, equity raising, GP, equity towards, for the lenders, short-term loans, investors, communication. And then the one that a lot of people tend to forget, the asset management, which lasts for the life of the property. So that could be 3, could be 5, could be 7 years, depending on your business plan. So you need to be looking at who's going to do this asset management and how long they're going to be doing that they need to get paid to do what they're doing. So these are the ways that we partner. Our goal is to enable more partners this year and next year and the years after. With doing that, it's creating, 10 to 20 general partners this year as operated by others, we call that. So we want you guys, or someone that really wants to operate, we'll help them get their deals in their location and run the deal. We'll help them with all of the process. So that's one of the ways. And then we also are partnering with people that want to be, growing in the general partner that have some strong equity capabilities. So lastly, I would just say is, we're not looking for help and things. We're looking for commitment. So always working in that direction. The last piece here, before we get into I got a couple more pieces I added. So currently we have under contract 3 properties. This is the sheet we follow all day pretty much, but every Monday we go through this with our team, talk about what deals we have under contract, what we have pending LOIs on, what are we underwriting. A lot of you have seen, I think this is common among big players. I know Cardone talks about this, tracks this. We have a lot of deals that we've archived that have come back to us, and then we just pull them up and we start running at them again. So other activities happening this year. So the fund, we talked about this a little bit last year. We're going to be launching our fund to raise 10 million somewhere during the month of January here. We'll be launching that fund. With that fund, we're going to be looking at multiple opportunities. We're also going to be, you hear other people talking about it. It's sort of going to be as well an opportunity fund. So just, as we can add value into that would be the way that we'll be making the investments for that. So it's a little bit of a flexible opportunity as well. The coming soon as well, we're going to be having a massive capital partnership program to share with y'all and what that looks like. And that ties in together with ongoing things that we're doing with others in partnership, basically deal doing, mastermind partnerships. We're working with Legends Equity Group. Many of you know Alex Lovely. So Alex, in the Legends Equity Group, the deal doer machine with Michael Menudo, Golden Capital, and then Hero Capital Raisers with Tim Mai. So these are a lot of where we're looking at massive to get bigger, and these teams will be working with us and bringing up their value, our value, and hopefully all of our partners and investors' value. And Mike Menudo, I added a couple slides here. You actually want to talk to them. I can skip. I'll talk to this one real quick, but Mike is one of our partners, and I got 2 more slides. Mike, I'll let you talk.
Sounds good.
But Mike's one of our partners that's doing the deal doer machine. Mike's been in the industry as a big dog. He started about the same time as I did, which is Big Dog is an REI group here in Texas. And with that, they focus primarily, initially, the primary focus is on single family units. But since then, you know, we've been moving with Michael and focusing also into some commercial. So Mike, I got this slide and this slide. You want to talk to it real quick?
Yeah, sure. Thanks, Mike. Hey, everybody. Sorry I was a little late. I was just wrapping up my call with my deal doer machine residential team. So yeah, as a big dog residential investor here in Texas, I've built out this deal doer machine platform where we provide all of the tools and leads, marketing services, support for investors. I've got about 180 residential investors on that platform now. And what we've done with Deal Doer Machine is we've now expanded it out into the multifamily and commercial space. And we're exclusively partnered up now with the Massive Capital folks. So what we're doing is we're offering this platform for multifamily and commercial investors. And this platform is going to give you all of the tools that you need, all of the leads that you need, all of the services and support and mentorship that you need. We've got the best commercial tools in the industry. We have things like Red IQ, Reonomy, and CoStar. You guys are going to get access to those tools to help you do underwriting, to help you find deals, to get all the information you need about properties that you're looking at. We've got a whole marketing machine up and running so you guys can get into the CRM, start reaching out to leads, and even hire a virtual assistant from my team to help you make calls and do marketing as well. And then on the services and support side, we have a bunch of VAs again to help out with that. But most importantly, we've got the Massive Capital folks that are going to sit there side by side with you guys and help you underwrite and do deals. So we really have a great combination, we think, of features in Deal Doer Machine Commercial Edition. Guys, please take a screenshot of this slide or take a picture of it, and also feel free to hit this QR code with your camera, and that'll take you to my website. I do a demo and a little bit more detailed presentation on Saturdays at 12 p.m. Central Time, so you guys can join me and get to learn a little bit more about exactly what we're doing on this platform and how we're providing all these tools and services and marketing and leads to residential, to commercial and multifamily investors. So please take a screenshot of this, take your camera out, go ahead and take a picture, and please join me at the next meeting, which is going to be Saturday at noon Central Time.
Thank you,
And
Mike.
then
And
next,
that's just kind of, this is just an overview of the packages as well, right?
yeah, I'll go into a little bit more detail on this on Saturday, but we do have packages that start as low as $300 a month. And guys, when you look at everything that you're getting essentially like $7,000 a month worth of tools and leads and services. I mean, stuff like the underwriting tool, Red IQ alone is, I forget exactly what it is now. It's something like $1,200 or $1,300 a month. Tools like Reonomy and CoStar, they're all thousands of dollars a month too. But when you get on the platform, you're going to get access to that kind of stuff. So it's a real bargain.
Thank you. I, you know, just as a point of reference, there is the two of the deals Massive Capital has done have come through that process and through that through those tools and those are really, when you talk about off market, that's what that's targeting. It's a way to go for off market deals. So all right, jumping now, and I'm going to lean into people. This is going to be more interactive going forward. I really appreciate everybody's time again. And we're talking about, building generational wealth and just some concepts around that and some questions that people have. So we had put this kind of out in the content that went out, was like, this would be some of the topics for this type for the discussion tonight. What I'd love to see from everybody is if everybody could take and pick which of these would be your most important thing you'd love to see. So we may not get to everything tonight, and I'll want to be sure that we follow up on them as well in the future. So if you want to know more about how syndication works, put a 1 in the chat. Put a 2 for, why would I invest in multifamily when I can reinvest in my business? Tax benefits, IRA. So pick one of those, 1, 2, 3, 4, 5, 6. Let's get an idea of what everybody's interests are and where we should focus this in now and in the future as well. So I'm seeing 4, 6s, 3s, 1.
Money will work.
They had a lot of 4s. 1 and 6. 1, 4, 4. Okay. Good. So we're going to cover a lot of these, and then it tells me definitely 4 and 6 is going to be 2 things. We're going to bring back some experts. We'll bring in Bill Pilkington, our CPA, and get him to talk about number 4 as a lead person for that. And on number 6, we have a few relationships, but one of them we use a lot is Quest IRA, and we'll talk a little bit about that as well. Good, and great to see so many people here tonight in this. 1, 3, 4. Okay. 3. All right, so let's go ahead. I'm going to go ahead and get started on a few things. And I stole some things from some of my mentors. So this comes from Brad Sumrock information. So one of the things that I'm going to start with is about syndications. And I'll let and Trevor, I have with me to share anything as well as Maria and Jasmine. But at the same time, if people want to jump in, just raise your hands and we'll do this as we go. So I invest, and I'll talk later about investing as well. So I invest in myself, I invest with others. And part of that is investing in programs. So I partner into a program with Brad Sumrock. I partner with Grant Cardone and Rod Cliff. So, and the big dogs you guys heard about. So I do that because for me, I wouldn't have known, I started into this, wholeheartedly about 18 months ago now. And for me, and I've been fortunate to partner with guys. So I think a lot of the pieces that I've learned in this whole process is because I invested with these others to learn about the important thing is network and teamwork and how I go forward, and that I don't need to be the one that figures all this out and solves this because other people have already done that. And Brad's a perfect example of that. So ways to invest in multifamily is, there's ways according to Brad, there's others, but keeping it like we're focused on, kind of, multifamily. We're also thinking about storage is probably the other avenue that we're investing in. So you can invest basically as an individual or direct, or even, I guess that probably is like a joint venture. I added a little bit of notes on the side. And, and there's no way to scale when you do it that way, an individual and by yourself in a joint venture. You might get a little bit of scale with a joint venture, but you always have to remember that a joint venture, everyone has to be active. So it shouldn't be that somebody can come, raise money, and people just put, money in and they step away, because now you're actually a syndication. We'll talk a little bit more about that. The most popular ways is through syndications. And then you can be in a syndication, you can be an investor as a general partner, which is basically the one that leads the deals, the one that finds the deals, puts everything together, does all the work, puts a lot of money into it initially, as well as the work to get it all, you know, moving along, take care of the down payments, take care of the legal fees, you know, and so forth. So the inspections. And then you have the passive investors, or the limited partners. So those are the ones that invest. And basically your opportunity money and let somebody else work for me. So I give you my money, you go work for me, you earn me money, and I get to, you know, sit back and watch that, you know, grow and
We can hear you anymore, Mike.
Can you hear me?
Yeah, but I think we lost you for a few seconds.
Okay. All right. No, I paused because something happened. Somebody. Okay.
I don't know what to do with the.
He's got access.
Well, for now, just go ahead.
So if you can mute everyone, I think somebody has access to the whiteboard as well, so you can. I don't know if you can clean that, but that's okay. So going on from Brad's stuff on the three things, is basically, you know, what a syndication is. And I don't, you know, what range we have of people here, and give us an idea, you know, are you brand new to this, or you've been doing this for a long time? But basically the syndication is just a temporary, you know, it's just a temporary group that you put together to raise capital to go and do a deal that you wouldn't be able to do yourself. So we do syndications, and you have a sponsor of that syndication that has that active role. So they go, they find the deal, they work with others that find the deal, and they put everything together. They get all of the lending done, they get all the legal work done, they get all of the insurance work done, all the equity raised, and the whole process to close the deal, and then they operate that for 3 to 5 years. And then what the sponsors receive, they receive part of that as a split. So they get maybe, you know, the sponsors get maybe 30% or 25% or 20%, depending on how the deal's structured. And the rest of the money, then the rest of the returns goes to the investors, or the passive, or the limited partners. And, you know, basically, like I said, they're ones contributing the bulk of the money. And they receive from that, they'll receive equity and dividends. So they get paid back for the investment that they make into that. So everybody gets, it becomes what is really the win-win situation for people that really love it and want to work at it and do it. You know, they get rewarded for that through the activity, and the investors get rewarded from that activity passively. So Trevor, you got anything you'd like to add on those first two slides?
Yeah, I think one thing that's interesting, because I saw a couple people pointing out that they're new. A lot of people don't really understand, like, what are the roles. And one of my best ways I find to describe it is like you're going to go on a trip on an airplane. So the sponsor is the person who owns the airline, owns the business. And they have people on their team, mechanics, flight attendants, pilots, and they do all of the work. And you, as a passive investor, you analyze, okay, where would I like to go and who would I like to go with? And then basically you buy a ticket, let's say, to go on the airplane, which is very similar to invest your money into the syndication, and everyone else does all the work, right? Your job is you show up at the airport, you buy your ticket, and you get on the airplane. So you can continue to have your job, you can read, you can sleep, you can do whatever you want. And all of the people that are running the airline, they do all the work. So the person that owns the airline, they have all the systems, the mechanics take care of the airplanes and make sure they're going to be safe. The pilots overall responsible. You have investor relations people like the stewardesses that give you updates, and you buy your ticket. They tell you what to do, where to go. They give you updates on your journey. So, hey, we're here, we're this. Oh, we got a little bit of turbulence going on. Why don't you put your seatbelts on? Let me explain what happened. Okay, everything is good. Now we're about to reach our final destination. And you as an investor kind of decide who am I going to fly with, and what am I going to do when I get there? And that's a big difference, right? So when you get on an airplane, you don't worry about, I want to sleep. I don't want to fly this airplane. And so that to me is what I call the simplest explanation of the difference between active and passive. And people that are active have to be trained and be educated, right? Do you want a pilot who has never flown an airplane before? Do you want a mechanic who's never fixed a flat tire or fixed the wing or fixed the thing? No. So the sponsors, they have people on their team that have these skill sets. And it's a really good analogy for people to understand what are the differences between the two, because it's something that we've all done.
Thanks, Trevor. And I hope maybe I noticed was a little delay on my internet, so hopefully you guys can hear me better. And yeah, no, that's a great analogy. I love it. And some people didn't love it. I was noticing in the chat. So but meaning that they were like, oh, I'm not so excited about the airline right now. I think the analogy makes sense. Jasmine or Maria, I'm lean to you guys. Would one of you like to share a little bit about what you've learned about the differences and the ideas of being a sponsor, co-sponsor, or a limited partner versus a general partner, and how deals are done? Maria, you want to go?
Sure. Being a limited partner has been really helpful for us when we started learning about multifamily and when we got into the industry. When we first started learning, we were a little apprehensive about putting money in, but the whole team, as Trevor had talked about, it really brought us on to explain every step of the way what they're doing. It's not like we invested a large amount of money and then we just stopped learning completely, and that was kind of it. So they really do take the time to teach you all of those aspects of what's going on and kind of keep you up to date on if things are changing, what new rents would be, how they're doing that. So that was really awesome as being an LP. But when we started to be a general partner or co-sponsor, we started to learn the inner workings of the deal and the different sides of how much work goes into a deal. And when we started to figure that out, we understood why there was a GP and LP split, or why there was some money going to the GP team. The amount of work that goes on to the GP team was a lot more than an LP side. So that's what we've learned as becoming a GP versus an LP.
Thank you, Maria.
That was great. No, just to add, just talking to a lot of you, yeah. Everybody's probably wants to be a GP at one point. That's what they're looking to, because it's cool because you get the 30% or whatever the difference. Like everybody wants to be a GP, but what I tell them is yeah, we're all gonna be there. But first of all, like you say, Maria, there is a lot of work behind. But also when you're raising capital or when you're talking to investors or when you're choosing partners, you need to it's just easier to raise capital when you share your story. When you say oh, I have this, I've been through this deal, this happened to me, these are the good experience. Just like Trevor has a lot of good experience to share, and that's what people trust him or trust us, because we can talk from my own experience. So that it just makes difference when you're raising capital or just operating the property, being on the LP first and see how people operate the property, what they do right, because everybody has good deals, but when you're actually in the numbers and when you're talking to the operators is different. So when you have that experience, it just sets you, it just opens the doors for you to be a GP. Also helps build a relationship with the sponsors. Because if you want to be a GP, so of course, you're gonna see how they work, how they operate. And before you get into a GP, which is a lot of work and a lot of stress, ups and downs all the time, like you need to know the people. So date before you get married, So yeah, I just wanted to add that.
And
And I don't
one
know-
more thing too, I wanted to add. A lot of people are like, oh, I want to stop being an LP and I want to become a GP. I want to live off my passive income. So I'm an old man, if you can't tell, because I'm sitting in my car in the dark. So it's joining the call. But so one of the things I always tell people is, don't try to live off your passive income at the very beginning. Just think about this. You have earned $100,000, which is a lot of money, and you invested in a syndication, and in 5 years, it should double itself. So now it's 200,000. But if you have to live off that next 100, you only have 100 left. So if you take that 200 and invest it in the next syndication and it doubles in 5 years, it's 400. You do it again for 5 years, it's 800. You do it again for 5 years, it's 1.6 million. You do it again for 5 years and it's 3.2 million. That's the time to retire and say, okay, I'm going to be or you may not even need to be a GP. So reinvesting versus thinking I'm going to live off my passive income is something that I always recommend for young people or new people starting out. Build your wealth first, and then you can once you get that created to where it's multiple times your income, because the compound effect in real estate, and you have to remember, so much of that is tax-free. And so you have to remember that all those advantages, it's significant. So it's just something I always like to, as an old guy, I like to make sure people, because I didn't start till I was in my 50s. And what a mistake. What a mistake. Like, don't wait to buy real estate and wait. It's so true. And I didn't start. And so it's going to be almost impossible for me. Some young one like Jasmine and Maria, they're younger. They're gonna double their money. For me, 25 years I'm talking about. If you're 25, you're only at 50, and you've got $3.2 million from your original $100,000 investment. Tell me that's not going to change your life, and you can retire early and then do what you want. So think about that.
That's so true, Trevor. I mean, that's like the best point, especially when you're reinvesting that 100K and you are still doing whatever you want to do, what you're doing right now. So it's really putting your money to work for later in life.
Yeah, just really quick one. Yesterday I was having a conversation with an investor, and he's like, I want to be GP, but he has this IT business that he's like, I just want to exit that and just be GP. Like, it takes time until you start receiving. I'm like, don't take for granted your business. Like, just analyze. Maybe you just need to accelerate that business, expand it, and eventually you can exit. But don't take your W-2 jobs for granted, or your business. Like, that's what is generating the cash and the capital that you can start throwing into multifamily. So, yep, I think that's it on my end. Back to you, Mike.
Thank you. And so I just went back to this one slide because this slide is basically everything that goes on when you're being a GP. So this is not everything, but it gives you a very high level of all that takes place. So it's good to talk about. It's good to have the discussions. Think of where you want to be in LP versus GP. Work with some teams, and they will help you find that way. Also, work with Massive Capital, potentially work with Legends Equity, Mike Menudo. We'll help people find which way makes most sense for them of being an LP, GP, and how that makes it the best. So I'm gonna stop there on the LPGP and then jump into, I got only 2-3 slides left. And Trevor actually talked about my last slide already. So I think it's like he already read my slides or something ahead of time. But one of the other questions that comes up a lot is like, how can I invest? Like, where does my money come from? So, this is just a really high level view of that. But and when we get to Q&A, if you raise your hands, if you got some questions, we'll try to share. But like I said, we're going to bring some experts in on these. But, you can invest, from cash, from check. I've had people give me cash. We received checks this past week in the mail of $600,000 in checks that we had to go deposit. You can invest from your savings, IRA. We've done a bunch of IRA conversions where maybe your IRA company doesn't let you right now, so you have to convert it into the number 5, which is a SIDRA, self-directed IRA. From a self-directed IRA, you can invest in anything almost, whether that's real estate, oil and gas wells, water wells, anything that you can imagine you can invest if it's a self-directed IRA. And then the same with a solo 401k. You can, solo 401k is basically a 401k that you are the custodian. So a SIDRA, self-directed IRA, you have a custodian within that company. There's companies like I mentioned, Quest. There's many others out there. With a solo 401k, you are the custodian of that. So you're the one that decides how things get invested and where they go, and you have to track it yourself. You can invest from a trust, you can invest through an LLC. So there's multiple ways. I'm sure there's many more that I didn't capture here today, but just to let people know that there's multiples, and we'll be talking more about SIDRAs and the solo 401ks in the next few weeks. And then what I threw on here as well was what I talked about earlier was additional. How else do I invest? So additional investments are time. Invest your time in actually researching, learning, vetting. Underwrite the team, underwrite the deal. Underwrite just means, basically taking that deeper dive, vetting it, looking at the numbers, looking at how they work, looking at their performance, looking at them as individuals, whatever you need to do to underwrite the team and the deal. I highly encourage people, invest in training and mentorship. You want to go to the next level, you want to learn more, you want to be better, you want to improve your finances, invest in training, invest in mentorships. And then the other one I thought about was investing time in networks, right? So come to these free meetings, go to free webinars, link up with people on here, connect with others in here, and get to know people. The best way to learn is to talk to somebody else. That is great. Just direct talk with someone else. So and I was looking at the time, so we just got a little bit left, and then I'll come back to that. Or we got one last slide, and then I'll just open it up. And really, if people would start, if you got some questions, start raising your hands. I see Paul. Hey, Paul, did you have something you wanted to interject?
He put it up when you asked if he was here. He hasn't taken
Oh,
it
okay.
yet.
Yes, sir. Yeah,
Go ahead.
you've hit the nail on the head, Mike, on a lot of things, and what it all boils down to, and I think Brooke said it as well in her chat, is invest in yourself. Challenge yourself to read a book a week. Challenge yourself to reach out to mentors. Challenge yourself to reach out to all these other people on this podcast. This is awesome stuff, and and we've said this 1,000 times, and it sounds kind of trite right now, but in investing And multifamily and all this investing is a team sport. It's really, really difficult to do it by yourself. I've tried it, and it's much better when you work with other people. This is a networking kind of industry, and yeah, it's also kind of a copycat industry. So if people are doing things, you can do that along with them, and what works for you. So definitely invest in yourself. You'll find that there are a lot of ways that the money will come, and you start to invest slowly, like Mike said, and it compounds on itself. And before you know it, you've got a really nice investment portfolio.
Thanks, Paul. And then so I was just sharing this slide. I steal a lot of stuff. I stole this off of another post, but just, generally, this is something that keeps coming up is, why invest in real estate? I could keep it in cash, and not risk it. But if you don't invest, you're probably risking it because, of inflation and what's happening. And it's also, real estate, especially multifamily, more so as well, can be a good hedge against recessions as well. So I just wanted, think about that, how overall real estate has performed, not just in our lifetimes, but over many lifetimes. And that's where the real wealth lies. Doesn't, you can get rich in other things and, and pay taxes and this and that, but the real wealth is going to lie in real estate. And then this is really the last slide. And I'm going to actually, instead of going through this, I'm going to leave this on here. This is what Trevor just talked us through, which I was highlighting this as well. You work your butt off to save, keep your lifestyle the same, and you save about $100,000. Go invest that. Okay, maybe it's 10, maybe it's 50, 100. 100 was a good number to use, depending on where all of us are in our life right now. And then, you typically, let's say you might get at 6% cash on cash and a double equity. So in 3 to 5 years, that 100 becomes 2, and you earn about 6,000 per year on the way. The other part is you get the taxes. Your taxes that you pay on that investment are negative, typically, because you're going to receive a statement that says you lost 70,000 because of the this last year, at least, accelerated depreciation and cost segregation. And you might be able to even use that against other types of income, but I say check with your CPA. Don't trust me on that one. So in 9 to 5 years, that 100,000, becomes 8, and then 12 to 20, that becomes 1.6 million. So it's that process, you can just think, okay, in 15 to 25, then it's 3 million. So, I'll pause there. I'd like to go to, some Q&A or we can continue to chat here, but I'd like to go to some Q&A and love to hear from some people in the rooms that are, so somebody like Madison, it's been like super active, hitting me up on stuff. I'd love to hear anything Madison has right now. Jakin's been involved with us recently. So just guys, jump in if you're ready. Throw up your hand and just share with us what you've been doing, because some of y'all are fairly new, but you're very active. So love to hear more of that, and anybody that's experienced. Go ahead. Go ahead, Matt.
Hey, thanks. Appreciate the call out. Like you said, I've been just trying to be around, kind of get noticed, absorb as much information as I possibly can. I'm very new to all of this stuff, and so I'm just trying to be a sponge, all while taking care of the kiddos. So I don't really have a whole lot right now,
Man,
look,
every time that you're talking today, it seemed like maybe you've been too busy.
yeah, I've been pretty busy today. The kids are keeping me on it. It's like right at that last day of my wife's 3 in a row 12s. So they're climbing up the walls and I'm just trying to keep up. So I'm just absorbing where I can. I'll be fresh a little bit later in the week.
Okay. I see a question from Trent was, what is the general entry level for, and I see people answering it there, but for an LP investment, right? So yeah, typically an LP investment will be 50 is typically the bottom starting point. And then you may have 100 for a lot of, so I would say typically you'll see a 506B. So we didn't like lay this out, but there's a 506B type of investment, which is friends and family. Doesn't require you to be accredited. Sometimes it's raising for maybe a smaller overall property value. And then a lot of times people will start on a 506B around 50 or 75. 506C, which is accredited investors only, means that you earn 200,000 or more over the last 2 years per year, the last couple of years, where you have $1 million in net worth, not including your house, then you can be a 506C investor, accredited investor. And those usually start around 100,000, sometimes 200,000 on those. I would tell people though, like, I'm not going to say, hey, I'll let you in for this or this. But if you like, hey, I really want to invest, I've got this much, would you let me invest? Sometimes, just see how the discussion goes with somebody you really know and then somebody you trust. Let's go to Simon.
Yo, what's up, everyone? This is Simon Wynn out of Houston. I'm doing a fast today. I just finished my 4th day, so I got less than 24 hours to go to complete 5 days, so wish me luck. I have an investor that I've been working with for a long time, and he is advised by his CPA not to invest in syndication. And with everybody here, let's put our heads together and just shout out all of the overcoming objections why that would be a bad move, because his main business is not real estate. His main business is in something else. So I would love to hear as much input from everyone as possible. So go ahead at it, please.
So Simon, first, what is the objection that you get? What is the objection that he says to not invest in syndication?
They feel okay. First of all, their CPA is against it because they don't understand it. He doesn't understand it, and then he feels that it's less control because someone else is handling the deal and he doesn't have any control. Control is the main objection. So I just want to have a whole list of things for him so that he can really kind of look at it and say, wow, okay, all these things I have to worry about if I'm doing all of this by myself, right? So he's a businessman. He makes tons of money, but his mindset is, do it yourself. And he has enough money to buy. I've been sending him other properties that he can just buy outright. But I also want him to jump into some of our syndication deals because, just so he can get his feet wet into this, right? So.
Yeah.
Hey, Simon, is it a control issue or a trust issue?
Well, it could be both, right? The reason why you can't, you feel that you don't have enough control is because you don't trust other people, right? So it's probably both.
So I saw a couple of good things in here that I see more and more. One is like So let me ask Simon, have you invested in a syndication yourself?
No, I have not.
So maybe one is you have to show that I'm going to invest in a syndication in order to show him that I believe in this as well, as one
Right,
thing
so-
to consider.
Yeah, so the answer is, if he's going to invest, I will invest with him. That's not a problem.
So no, I think it's more lead by example is
Right.
is the thought, right? Just
Right.
so sometimes maybe people believe, you know, what I do is, you know, then I believe in it and I do it. And my intention is they're 100% into that. So that's just one thing. I saw some other things in here, you know, that there's discussions around him being a general partner or a key partner on a deal instead of just an LP. So there probably are, you know, a number of ways you can scroll through the chat. I'm sure we'll see some more ideas that people come up with. And I know you're working hard to, you know, to get the gentleman, you know, the people thinking differently, right? So it's a matter of, sometimes it takes 3, 6, 9 months for them to be okay, and maybe just get them to do even a, you know, what I've done with some people is they'll do a 50 or 100K investment to start out, just so they can see the process of what happens. It doesn't have to be $1 million investment or a $5 million investment. So it's just a matter of understanding and seeing how it actually works. So
Yeah.
I don't know if any of
Hey,
those.
Mike,
Yeah.
can I talk to that control issue? I definitely understand why people want control, but I would ask you, how much control do you have on your Apple stock? How much control do you have on your Tesla stock? And at the other end of the spectrum is, do you want to be cleaning toilets and taking care of broken doors and all of those kinds of things? So if you are a W-2 person working, you're going to need to trust somebody to take care of your investment, whether it's Apple stock, Tesla stock, or a multifamily investment. So it does come down to trust. And so that CPA that's advising people not to get into syndications, you're right, they really don't understand that, and they don't understand how real estate works. And I totally favor complete diversification. You should have some stocks, you should have some bonds, you should have some real estate, and all of that is true. But the whole idea of control is pretty individualized to people. But it really more, to me, comes down to trust and who's taking care of your investment.
Right, yeah. Maybe just get him to invest in a, you know, small amount, you know, 100,000 or something, instead of, he's got a huge 1031 exchange, 14.8 million that he needs to deploy, and he has 10 days left before he has to identify a property. And I've been working with him to you know, break it up, or, you know, and go into several different properties. But so still working at it. It's just that I would like to hear, you know, and thanks to you guys for giving all these input, because it's great. But the more different opinions I hear, that way it's a better way to help overcome his trust issues.
Yeah. Okay. No, that's cool. Thanks, Simon. I appreciate it.
No, thanks for everyone for their input.
And we'll have, I'm sure we'll have some more for you as well. Yeah, there you go. You can use a DST. Let's go on to Victor. Victor, you're still muted. Victor, you're muted if you're trying to.
Yeah, can you hear me now?
Yep, there you go. Thank you.
Yeah. My question is this on the syndication deals. Most of these deals, they take out loans. Let's say a year ago, they took out loans with a fixed rate of, let's say, 3 or 4%. And when you join as an LP, they tell you, well, you'll be recapitalized by year 3 or by year 4. Now, with interest rates going up, they're approaching 7, 8%. And let's just say that they stay there hypothetically. How are you going to get recapitalized? If you took out the loan for 3% and you refinance in year 3 and the rates are still at 7%, how would you be able to get recapitalized?
So I don't think in that case, you probably wouldn't. And sorry, I was writing a note when you were started out on the question, Victor. So the biggest part I heard was if you have a note at 3% and the thought was, okay, I'm going to refinance in 3 years and get the money back, or get recapitalize
Right.
at 7%. So one of two things would have had to happen, I guess, in that period, right? One is either you didn't have ever a plan to recapitalize in 3 years, but maybe it's in 5 to 7. The other is that you have to really work. You have to work hard to increase the value of the asset, so the value of it and the cap rate, you've driven it up above what the value, what you're going to recapitalize at. So you would depends what you bought it at. Like, did you buy it at a 5 and you'd have to drive it up to a 7 cap or an 8 cap to be worthwhile to do a refinance at that point?
Right, because I did an LP deal with my friend, and he did the deal. We did it a year ago. It's coming on year 2. And when I signed on to the deal, he said, oh, you'll be recapitalized by year 3, which would be next year. But I can't see how that would happen if interest rates still stay at 7% and they don't go down, or they continue to go up. So what do you tell your investors when they say, well, you said I was going to be recapitalized in year 3, and now it's year 3, and with interest rates still high, I'm not going to be recapitalized?
I think I'll share mine. I'll let Trevor or Paul share their thought as well. But I mean, you're at the point that you have to just tell them, okay, this is the case and this is the why of that, the facts, actually. You get to, did you come in with something else, Victor? Okay. So you have to just just be transparent and honest on that part. And or you work with some teams and say, work with somebody and figure out maybe there's an alternative path for this, to understand, like, the reasons why maybe either, the asset has, maybe the asset's performed as it planned, but the interest rates have gone to a point that the original plan just doesn't work now. And, we usually wouldn't say in our plans that we were going to recapitalize at 3. We would make that, wouldn't be our base case. That would be an opportunity case for us.
Okay, thank you.
But connect with us later. I'll put my information here as well. And Jasmine, can you put your information and get connected with Victor, and we can follow up if we can help out anyway.
I appreciate that. Thank you.
Thanks, Victor. Grant.
Hello. Hey, everyone. Hey, Mike. We spoke like last Thursday on a call. And, looking forward to speaking with you. We said we'd get together and have a call.
I
this
know.
weekend. So I know you've been busy.
We will.
So I've been watching you.
Hey, Grant, before you
Right.
go too far, no, I just wanted to say, if anybody needs to jump off, I appreciate everybody coming tonight. We'll finish up with about 3 more questions, and then we'll wrap it up. But I'm gonna go ahead, Grant. Apologize to interrupt you.
No worries. Okay, so yeah, so my question is, I know a lot of the syndications are done using the 506B and the 506C exemption. And it seems like a lot of them are done with 506B as opposed to the 506C, even though that allows you to advertise. So I guess it's a 2-part question. I'm wondering why more people don't use the 506C when you can advertise. And then also, like, when you're doing a 506B, what's the limit? Like, where are you crossing the line in advertising? How much can you talk about the deal? Because I know in that other call, you kind of talked about the deal a little bit. So I'm not sure where are you crossing the line?
Yeah. Okay. Is Trevor? Are you still on here, or did you skip out? I don't see him. I was going to let Trevor address this a little bit. All right. He may have left. Oh, he had to go. Thanks. So the so I know, so that I don't think there's no definitive answers, right, on when or what to do, a 506B or a C. I know, like, I think it's, some of us that work, like I said, with Brad Sumrock, one of his partners, Charlie Young, has done, as I understand, all of his deals have been 506Bs for a long time. And it just so happened that it works okay for him and others, is you can continue to do really big 506Bs once you have a good, strong network of investors.
Okay.
That both will put more money in each time, and they will do referrals for you. So some people do 506Bs forever. 506C is really good actually for more newer investors sometimes, because then you can go out and advertise and attract investors that you may never ever known for those. So that's, there is no really a strong point of when you do one or the other. They're very much dependent, really, to me, on the circumstances. And like, if you just did a 506C and did a lot of advertising, maybe you want to do a 506B next, because you may have some investors that you would like to have invest with you that are not accredited. So, and I know we have that case on some of ours recently. So it opens up different opportunities at different times. The 506B that I talked about the other day was we had closed on the deal, and I was done raising for that deal. So I was just sharing a little bit as an educational piece on it, as to how the deal worked and what a pitch deck looks like, and how we put together the pitch deck and things like that. So you can't really, if you don't know everybody in the room, you're not supposed to advertise or share the deal as an investment opportunity.
Okay. Awesome. Thank you.
Appreciate it. Thanks.
Yeah.
Thank you. Thanks, Grant. And we are going to get together, man. It's going to happen.
Okay. Sounds great. I'm looking forward to it.
All right. Hey, Jeff in Atlanta.
Hey, how's it going, everybody?
Nice to see you.
Nice to see you too. We got a couple things I want to help out with here. Some folks might need an SEC attorney. I have a good one through another partner of mine here in Atlanta. So if anybody needs somebody with SEC experience. He's probably 40, 45 years of experience with the SEC stuff. And anybody that needs something in Atlanta, I'm your guy. I'm retired. I spent a few years in the military, get a little check every month as a result. So emphasis on little. Anybody needs help in Atlanta, I'm glad to help out. Metro Atlanta area, or even in the Southeast. Since I'm retired, I can go just about anywhere whenever I might be needed. So I could be the vital piece of somebody's project if they, think of me, or if you can think of me or remember me down the road. I'd like to offer that up for everybody.
Thank you, Jeff.
Hey, not a problem. Glad to be of help. I just hope I can do that.
And you've dropped your information here as well, so people can connect with you.
Oh yeah, I dropped the information a couple times. It's in the chat, but
Okay.
I'm in Atlanta, and you have my information probably in your phone because we've talked a few times
Oh,
about.
I got yours. I got yours. I'm just talking about everybody else, and I see it's already on your screen, which is really smart. Jeff in Atlanta, 770-402, 1969.
As long as they can see the screen, they can get the number and they can call me.
Yeah. Okay. Thank you, Jeff.
Thank you, sir.
Appreciate it. Donna.
I'm sorry, it took me a while to figure out how to raise my hand. So Simon, I have some information or some experience with maybe some of the things that you were talking about. So if you wanted to like chat offline, or if there's something I could do, I'll text you or chat you my phone number, and feel free to call. There's a lot of value to be said for big check writers. And a lot of times they do want more control, which I think is kind of understandable sometimes if they're writing big checks. And but there's a lot of, I think, to build goodwill and build a relationship with these guys can really help as your career goes on. So we have some experience with that. I'd be happy to talk to you about that if it would be helpful.
Yeah. So tell us, Donna, where are you at? What do you do?
Oh, I live in North Carolina on the coast, and we are residential developers. We do just the horizontal part of residential communities. So let's say there's a little Horton development, DR Horton development. We're the people behind the scenes. We're involved. We're just in the land piece and all the horizontal construction stuff. And we've sold pads to multifamily developers, and we've watched a lot of them trade over the past, let's say 5 years at these just incredible multiples. We're just really kind of getting involved in the community. It's just an amazing group. You guys are an amazing group of people. We're learning so much, and we're just trying to figure out how we can best add value to the group and figure out how we can synergize with everyone. So anytime like something comes up or I know something, which is rare, since this is new, I want to jump in and try to help. So yeah, you guys have been terrific. I really appreciate being included.
Yeah, and I hope you drop your information in the chat as well, Donna. We actually have some partners as well in North Carolina.
Oh, that's great.
We've done one, we've got one apartment there. We're looking for some more, so.
That's great.
Okay, thank you. Glad to have you here.
Donna,
Bibi.
please drop your information in the chat.
Is it Bibi or Bibi?
Hi, everyone. And thank you. Yes, thank you so much for this meeting. I have a question. I would like to know, okay, because I don't have a W-2 job. I do real estate investing full time. So what would you advise to someone like me that I've been doing multi-units for a while, but personally with my partner, and we've been able to grow, but when you're investing with your money, you get to a point where you can't scale up. Because I heard in this meeting, you're saying that we just need to maybe start as an LP before we move to a GP. But for me, I'm at the stage where I'm at a GP stage because I've been able to get some deals, put them under contracts or LOI. I do my due diligence with a team of people, but we've not been able to cross over because it's either I think they always want to know who you're working with and all that, because I'm kind of in a new market and all that. So those are the challenges I've been facing. So I want to know, what would you advise to someone like me that I think I should be a GP, or I am already doing the job of a GP, but I cannot just get to the finish point. What do you advise?
What, so I have probably, personally, I have a few ideas. I'm sure others here have some ideas. What market are you in, or what market do you look at?
I'm in Dallas. I've been really underwriting Dallas, and I'm now moving to Oklahoma.
Okay. So, I'll just tell you some of my experience and things that worked for me that didn't relate to putting any money into, and I was able to become part of a GP. And so a lot of so I will say one thing is it may take plenty of time. It could be 3 months, it could be 6 months, it could be a year before before maybe that first opportunity comes up. The things that I did was this, like, come on to this, ask the question like you asked, talk about what you're doing, talk about what your intentions are, talk about it on Facebook, talk about it on Instagram, talk about it on LinkedIn, TikTok, wherever, and let more and more people know, and keep coming to other webinars like ours. Go to the Legends webinars on Mondays and Thursdays. Many others have, their meetups and things. Go to local meetups. And what happened for me was, one of them was I was just participating with a group, and I happened to be the only person that was available to go take care of walking a property. And through the process of that, shared with the team that I was, hey, I went and walked this property. This is what I saw. This is we talked about it more, and we agreed then to make to do a deal on this. So I became a GP just by being available and showing up for something that some other people couldn't do at the time. So there may never be a specific answer, but it's continuing to work with the team you're working with, or that team finding you a team that you can connect with. Maybe it's us, maybe it's Legends, maybe it's another group that's out there. But if you by yourselves, aren't able to, maybe you look and connect with a team that can bring that whole team up to the next level. The other way is, just through, building your network and being able to, be a GP. As some people become GPs, not only as raising equity, but they become investor relations, they do asset management, and they raise equity at the same time. So there's some other avenues to consider, and keep talking and keep asking the question. Anybody else have something to share on that? Maria?
Yeah, I do. I think I'm one of three. So it's me, my husband, and my brother-in-law. And what was best for us was when we joined a team that was bigger than us, someone that had more resources, had more access to more deals. When there's only three of us, we can only do so much. So finding a team that was bigger than us was our biggest advantage, just so that we could see what they were doing and make ourselves even better. So just keep talking in the groups. If you find a group that you like, maybe start asking to join as much as you can, but just keep being present on these calls. It'll really help get you noticed by other people.
Should we go to
Go
the
ahead.
next?
Oh, sorry. Yeah, go ahead. And I guess we'll stick around as long as people want to ask questions, and we'll answer them. As long as people want to stick around, we're here.
Yeah, we're here 24/7. Guys, so do some posting on social media. I always forget, but I just took a picture. But if you're attending to this webinar, tag Massive Capital, tag myself. We always repost everything that you guys do on all social media. So yeah, feel free to do some content. Leslie, no, Lysine, I'm sorry. I don't know.
That's okay. It's Lene.
Lenny, okay.
The S is silent.
Okay.
Yeah, I go to Alex's little group. So, and I'm really enjoying that group. And I'm in the Grant Cardone's club. And I've been trying to go to most anything that he has going on. I have my own 8-apartment complex in Idaho. That is, I've had it for years. And I want to get into bigger, but you know, it's a whole different ball of wax compared to the little 8-apartment thing that I've been doing all myself. So, and then I was looking into one today. Somebody sent me a real estate guy he's from Orlando, and I think it's off market, but he won't even tell me what city it's in. You know, I mean, when he's asking me all these questions, well, how much money you have in the bank? And, you know, you have to have 2 more people to sign on for the, what do you call it? The AE, I don't know what it's called now, forgot. Something to be able to get the finances type of thing, whatever they call that. Anyway, so I'm just trying to work on it. I put a little ditty into the real estate group on WhatsApp and asking somebody, help me, please.
Yeah, I think that's
So-
the hardest thing too, is when you're first starting out, you go and you ask people like about a deal and they just start drilling you with questions that you're not ready or even know that they're gonna ask.
Well, I already have an
Right, and the
LLC,
8 units, which
you
is
know,
awesome.
and it's in Nevada. I went to the bank and I talked to the bank of what I need. And they asked me what I'm looking at. And I said, well, oh, maybe, I don't know, you know, up 32, 64, whatever, you know. And they said, just, this is what you need. And it takes us about 2 months and you'd be fine. Okay. So then I said, I need partners because I don't have the money for the down. And anyway, so he's talking 20% of 38 million. And I don't even know what the size of the apartment is. So anyway, that I'm just talking on.
Lene, it kind of sounds like you were the one talking most on that conversation. And what does Grant say?
We've been doing it through the emails.
Mm.
He'll ask me a
Like-
question, then I'll send him back to answer the questions he wanted.
Get on the phone.
Yeah.
Get on the phone. So I'm sorry just to jump in
Definitely.
here, but I'm hearing you and I'm just like, you know, I'm gonna stomp in here. So I remember the first time I had to call brokers. Make sure you have all your stuff together. Do not give them the ammo to chew you up and spit you out, okay? The first time I had to call a broker, I had already done the napkin underwriting at a high level. I knew everything about the market. I knew everything. I had everything on a paper, right? Do your shit because they're not going to trust you. And first impressions are everything. They're asking you 21 questions because they don't think you're going to execute, right? So make sure that before you get on the phone with the broker, you've already done a high level, napkin underwriting. You've already done some form of due diligence. You've scorned the market. You have a little bit of some comparables. And when you first call them, the only thing you need to ask, you're going to say, hey, my name is, let's say, well, my name is Brooks Avalos Pinheiro with Empower Capital. I saw this gorgeous property here. 1, is it available? Yeah, fabulous. 2, when are LOIs due? I kind of go from
His
there.
thing is,
right?
I never saw a picture of it, anything. He just texted me before Christmas and I put on a little blurb on our real estate group. Does anybody have any apartments 64 plus? And he said, I do, 106. And that's all I got. I asked him to get information on it. And then he goes into all these questions.
Yeah, I'm gonna
There's
go.
a lot of people faking the funk, okay?
Yeah.
You should go hunt the stuff that you are looking for. Go on CBRE, JLL, Marcus and Millichap. There's a shit ton of websites that you can go on. You need to be the one in control. Do not let these people deter you and string you along. Don't do it. Go find what you're looking for, research it, sign up and then you can get emailed. You can filter your criteria on all these sites, correct CJLL, et cetera, CBRE. And then you can sign up for all of their emails. Now you're in charge. Now you're doing the due diligence. You'll sign a little NDA or whatnot that will open up all the financials, all of this stuff. And now you have the control. Now you're calling the broker because too many people, girl, are faking the funk and they're going to waste your time. So be very careful of that.
Okay, thank you.
Thank
you, everybody.
Thanks, Lene, and thanks, Brooke. I mean, it's great because it's like breaking in. I remember just the first times, and it took, it took some time and practice and just doing this. So thanks for both of you. Go ahead. The guy that's asking lots of questions and this and that, call him and talk to him, at least, and get out of the texting, chatting, emailing, round and round stuff. So so great feedback. Thanks as well, Brooke.
Thank you, everybody.
Thanks, Lene. No, Madison, we don't have time now, I'm kidding. Go ahead. Actually, yeah, go ahead. I think Svetlo put his hand down or he walked away. So go ahead,
No
Madison.
worries. Yeah, I just I was kind of struck with a little bit of inspiration. A lot of people like myself, Lene, are struggling with the confidence to do a call and stuff. I'm gonna set up a role play call, and if anybody here is really experienced with talking to brokers, putting them on the defensive, I'd love to be able to get your information, schedule a time when we can get you on the call, get in the newbies and sit there and do a lot of role play and have each person just practice it and come up with a script so that they're prepared when they first start calling brokers. So if anybody is interested in that, please send me your information. I'd love to get something scheduled out.
Yeah, I have a script on that too. So if you need help, I'll be glad to jump on the call. Whatever way I can contribute, just let me know.
That's cool. That's great. And so you got Simon's connection. Where, Madison, I forgot, where are you based? You're muted.
Right now I'm in Montana, but we'll be moving at the end of February, probably looking at Charlotte, North Carolina. I'm originally from Texas.
Okay, Simon's down in San Antonio.
No, I'm in Houston.
Oh, you're in Houston. Why do I keep thinking you're in San Antonio? Oh, okay.
We moved out of Austin when we started traveling.
Shit, that's bad. I've been thinking about San Antonio so much lately. I think everybody's from San Antonio.
It's because we have a property coming up in San Antonio, Mike. That's why. That's all you can think. San Antonio.
I'm in love with San Antonio now. Let's go San Antonio. I have to be a Spurs fan. All right. Thanks, everyone. Appreciate it. I appreciate everybody coming out. The last slide's been here for a while, but this is just some of the things that we're working by and living by, and continue to reach out to us, reach out to Jasmine, Maria, whoever else you want to from the team here from Massive Capital. We're gonna have to get Maria a heart sign too, huh?
Gotta take mine from the Sunrock event.
Oh yeah, you can use the 10X one. All right.
You can use this one.
Off
All right.
the bank.
So Jasmine, do not close the room, please.
Okay.
Yeah. But we're gonna, I wish I had like a music to play to close out, but I want to thank everybody for coming. And again, it was, I loved it, enjoyed it, appreciate the questions, the connections, and everybody that came around. And I see a lot of great, investors with us. I saw Ron, you didn't even, I'm just surprised not to hear from Ron. I see Dan in here, Don Overton in here, Nabil. So Gabrielle, thanks for all being there tonight. Oh, we got cash flow going now, huh, Maria?
Yeah, I'm trying.
Problem is you gotta put it right in front of your face, otherwise, yeah. Gotta find a way to like slide in and slide out.
There we go.
Hey, hey, I have a question though. Hello?
Yeah, go ahead.
Okay. So, once you do once I do the self-directed IRA, does the 59 and a half rules that it happen when you're retirement age, does this still apply or no?
So a self-directed IRA, as far as the IRS rules go, is basically the same as far as age and time and that. So it just means that I can put it, like I can put, what I did with mine is I put it my retirement and some of that into my IRA, and then I invested it into real estate. So what happens though is the returns then have to come back to the IRA.
Okay.
But it stays protected, it stays tax protected if that's how you want to keep it. And it just, the money goes in and out of the same place.
Okay. Thank you.
Can you borrow against your 401k?
If you have, so two different ones, I'll share examples. One is, people with a W-2 that have a 401k plan. Most of those 401k plans let people borrow against those plans and pay back at a really low interest rate. And basically you're paying yourself back. So that does work. If you set up a solo 401k, you can borrow up to 50,000 against that as well. And you then pay yourself back again as well, basically. So yes. That helps, Simon? Was that?
Oh, thanks, but 50,000 is probably not the amount that some people are looking for. They have probably close to $1 million.
Yeah, but that's the part you said. Can you borrow against it, right?
Right.
But yeah, that's the limit you can borrow.
Okay, appreciate it. Thanks, Mike.
And I'm going to add to that, Mike. Can I add to that real quick?
Say it again.
Can I add to that real quick?
Oh, 100%. I was going to add to it first, and then I'll let you, Brooke.
So from somebody who's done both, so for the 401k, I think the interest is approximately 10% or whatever it is. And if you're still employed, they just take it out of your paycheck and you can have as disbursements. But that being said, if you have a W-2, your 401k, you cannot put it into an an IRA, let's just say that, self-directed IRA, unless there's a rollover clause in there. If there is not a rollover clause in your W-2, you have to wait till you're 59 and a half, or you have to quit or get laid off and no longer be there. Then the funds are yours to put into whatever the hell you want to do. So, correct. Yeah.
No, 100%. That's correct. But Simon, if somebody has a solo, so if it's a W-2, fine. That part applies. If somebody had the money in a solo 401k, like $1 million, there are different avenues they can invest that into real estate, even if it's their own deal. There's a lot of different avenues in that, but it takes some work, takes some of that investment I mentioned about learning and studying and understanding some of the scenarios. Anderson Advisors does a lot of YouTube videos on it.
Cool. Thanks. Yeah, I've been watching a lot of their videos.
Yeah, no, they have some great videos. So
And Quest is coming in a few weeks, right, Mike?
yes, we're going to be working on that. Yes.
So Gabrielle and Simon, those are awesome questions that I've jotted down too. And we can ask those. You guys can be the first people to ask questions when we talk about IRAs, self-directed IRAs and 401ks.
Okay, I will. Thanks again.
No problem.
Cody, man, thanks for hanging out with us. Good to see you a couple times in a row this week. Appreciate it. Appreciate everybody that voted for Jasmine. We forgot to mention that, but I think,
yes.
but is the voting already finished?
Yes, it closed today. Yesterday, sorry, at 5. So thank you so much for everybody who voted. Like that was amazing. Just having all the support. I don't know what's gonna happen at the gala, but just having all the support and so many people rooting for me and all that. That was amazing. That was a really good experience. Thank you so much for everybody who voted for me and for everybody who is here.
Awesome. All right. Hey, Jasmine, let's make sure we have a copy of the chat from tonight as well. Saved.
No. How do I
Yes,
just
Jasmine,
copy
it's just-
paste?
No. It's just 3 little dots, like right next to the face. The 3 little dots to save chat.
You already did it, Maria, or?
Yes, I did.
Okay. I'll let Jasmine go ahead, but just so we had
Just so we have 2 people do it or something, just so
Yeah.
Jasmine can see it.
get that. So cool. Thanks all. Sylvia, it's nice to see you as well here tonight.
Thank
It's a
you for
little late
having me.
you.
Thank you. I
It's a
really
little late
appreciate it.
for you.
Thank you. I'll see you guys soon. Bye-bye.
Okay, thank you.
Bye-bye. Have a good night.
Good night, everyone.
Great call.
Buenas
Good night,
noches.
everybody.
Good
Good
night,
night.
Simon. Thank you.
Happy
Thanks,
New
everyone,
Year.
for coming. Hey, Fody, Sean said that